Ladies and gentlemen, welcome back to the channel. AMC stock is up almost 2% at the time of recording this video, heading into the end of the day as the S&P 500 does not look so pretty, but we do have some news in which we covered in the last video as well. We'll talk about it again a little bit in this video, but I do want to focus on the broader markets as well here in this video because, yeah, things are not great. What's happening out there is not pretty. In bond land, in dollar land, in oil land, and all of those lands. So, what does this mean for the markets, for AMC stock throughout the rest of this week and over the coming weeks? We're going to break it all down for you here in a short, sweet, straight to the point kind of video. Hit the like button and subscribe to the channel if you have not done so already. If you're living under a rock, or maybe this is the first time you are coming across this channel, maybe the YouTube algorithm has finally blessed you with this channel. So, first things first, what I want to say, AMC stock is doing incredibly well. On a technical basis, I mean, you couldn't really ask for better. I mean, obviously, we could be up 20% instead of 2%, but we're positive 2%, 4 times better than the S&P 500, 400% better than the S&P 500 today, which is down about half of 1%. So I'll take it. I'm not going to argue with it. Obviously, we would like a bigger day, but I do think a massive rally for AMC stock is coming, and it's very simple. We're getting good news. Things are trending in the right direction for AMC fundamentally, but also just as a whole, I mean, I've said it before and I'll say it again. It sounds stupid, but it's straightforward. What, AMC stock could fall to $5 per share? Cool. $3? Bye, $3. But AMC stock could rally to 20 or 30 or 40 in 2024. That kind of risk to reward does not look great, even if you were to sit here and say AMC stock could fall to $4 per share or $3 per share. Fine. Okay, that's $4 or $5 lower than where we currently are. Fine, I got it. But AMC stock could much easily or much easier rally to 16 or 20 than I think we fall to $4 or $3 from here. So I think that's important context to really keep in mind. That does mean to me, heading throughout the rest of this year, the positioning in AMC likely gets a lot more bullish from here. Now, to add on to that, if you take a look at the Ortex data here with AMC stock, and you take a look at the option activity, the put to call ratio is finally collapsing, guys. It's been a long time. Now, take note of the history of the put to call ratio. So, when the put to call ratio hit its high back here of 1.13% during the June 2021 rally, or short squeeze, whatever you want to call it, really like a gamma squeeze. But once you hit that high, you started coming down. You got big rallies, like multi-100% rallies in here. But ever since about January of 2022, towards the end of December, when this court proceeding was announced and the conversion of APE and AMC's plans to dilute shareholders, the put to call ratio skyrocketed, okay, to about 1.8. You did not see a multi-100% rally at all. Well, now your put to call ratio is back down to 0.79, meaning there's more calls now than there are puts. This drop likely means AMC stock has the room, has the firepower, the potential to actually see a big move to the upside. That is what this is kind of telling me. So when you kind of couple the poor risk to reward for a short seller to be short in AMC throughout the rest of this year and 2024 especially, as well as the put to call ratio falling, this likely means AMC stock is about to go through a huge rally. Now, MOAS or not, I don't know. I'm not going to be the guy that predicts the MOAS coming, next month or whatever. But a multi-100% rally is certainly in the realm of possibilities, and I think that's important to know. So there is that. Now, the markets. So AMC stock has an interesting relationship to the markets. Today, the S&P is down, AMC is up 2%. You could make the argument that it maybe has something to do with this Beyonce news. Not just Taylor Swift, but Beyonce is going to be doing a movie like event around her recent concert, AMC stock did not react nearly as well as to this news rather than the Taylor Swift news, but you're still up 2%. It's still good news. Why? Why is it good news? It's pretty simple. If there's this writer strike that is creating a gap of, films not being in theaters, well, if AMC can create these partnerships, these deals to fill that gap a little bit, maybe earnings are going to be better than what some people feared they would be. So that's important to point out. Could be a reason why AMC stock is up 2% as well today. I would argue it probably is. Now, even when you look at something like the Russell 2000, AMC stock up 2%, whereas the Russell is down 2%, is really, really good news. Now, why is the Russell down? What's happening out there in the markets today? Well, not so great things. And it's kind of worrisome what caused this. So ISM Manufacturing PMI, this came in at 10 o'clock in the morning today, Eastern Standard Time. It came in at 49, so still under 50, still in contractionary levels, but starting to recover again. As you can see from this little chart, the bars are starting to trend to the upside. You were expecting 47.8. So 49 is better than the estimate. This shows higher for longer. Fed might actually need to raise rates again. But it's causing some huge moves in things like the bond market as well as the dollar. If you take a look at the 10-year Treasury, that is up 11 basis points today. Half of a rate hike. That's a lot for this one data print. Okay. The 2-year Treasury is up 6 basis points today. Oil, surprisingly, is down about 2.5%. So this is a positive, but not nearly, enough to offset bonds shooting higher. And what you'll also see is on the 2 and the 10-year yield curve inversion, the 10-year bond is up 11 basis points. The 2-year bond is up 6 basis points. That means the 10-year bond is rising relative to the 2-year. That means the yield curve is continuing to uninvert today. Now, this is not going to be updated until after the trading day today or possibly even tomorrow. But this is not great because once the yield curves start to uninvert, that's usually when you go into a recession. And you're seeing that start. And once you start to uninvert, you can uninvert pretty dang quickly here. So that's something to keep in mind. That's not great. It's not great at all. Same thing with the 10-year and 3-month as well. Yield curves are uninverting. Not great. Showing you're probably heading into a recession. So that's the big story of what's happening today. I would argue as well what is equally as important is the dollar. The dollar is up 0.58% today. As the dollar does go higher, this puts pressure on companies that report earnings in US dollars but do business in foreign currencies. If you take in foreign currencies, if you're an Apple, right, and you're selling an iPhone for 1,200 won, call it just 1,200 won. Well, if the dollar is strong, that means you convert that 1,200 won, call it into $100. But what if the dollar is half of where it was? Like basically during 2021. Well, that 1,200 won might convert to 200 US dollars instead of 100. So it just means your foreign currency converts to less dollars. That puts pressure on company earnings. So I think the dollar is actually the biggest thing you need to be watching here. You recently broke out of the highs that you had back here in March of 2023. If you start to get back up to these higher end prices, that's where you start to get into the lows, guys. The lows of 2022 coincide almost exactly when the dollar started to peak out back here in October. So this is very, very important. Dollar is right now breaking out to a new high of the trading day, up 69 cents, up 0.65%. You guys can track this for yourselves every day using the DXY. This is an exchange traded fund that does track the US dollar. So that is pretty important. All of this information is pretty important. Now, if you look at the KRE, this is the regional bank ETF. That is down almost 3% today. Now, KRE does coincide with the Russell 2000 a lot. If you look at the Russell 2000, that's down 2%, KRE down almost 3%. That is almost to be expected. But you did get news today that Ally Financial is laying off 5% of their staff. You also just got news that the Bank of Japan is going to be doing a stress test that is going to mimic what happened to Silicon Valley Bank for all of their banks as well. So that is not great news. And really what the KRE comes down to, regional banks, is TLT, right? The 20-year bond. A lot of these banks were buying long duration bonds when you were during this period right here, right? 2021, 2022, because it's a risk-free return. Why not do that? Well, when you're buying the bonds in the 140, 150 range, and now the bonds are $86, anything that you used as collateral with the bonds is in trouble, number one. I'm sure you guys understand that very well, being viewers of this channel. Collateral is in trouble. Or if you start to run low on funds because maybe you're getting, 5% interest or 4% interest on your money, but other competitors are giving out 5%, well, you no longer can capitalize on a huge spread there, where maybe treasuries back in 2021 were yielding you 1% or 2%, and your savings account rates were 1/4% because rates were at 0. So now you're no longer capturing on that spread. If people want their money out, you may have to start selling these long duration bonds that have dramatically decreased in value. So that's the problem. Regional banks, I don't think that situation is over. That's something you need to be watching very closely. Now, in terms of AMC stock as well, back to the whole rally discussion. For this week, you have about 19,000 calls in the money, about 60,000 calls out the money. In the money puts at 7,500, out the money puts at 35,000. And this is basically the same for all of these expirations as well. There's a lot more call activity than there is put activity. Another reason why AMC stock could continue to trade higher. Now let's briefly run through the Ortex data. Keep in mind, take it with a big grain of salt. These numbers are not accurate, but we've went over them for a long time now, so we'll continue to do so here. You have a short score of 66, $175 million worth of short positions. Oops. You do have an estimated short interest of free float at 11.06%, free float out on loan at 13.47%, shares out on loan 26.63 million, days to cover 1.83, cost to borrow about 3%, and utilization of 55.01%. So you do have quite a reading here. Does not look all too great. Now, as far as economic data coming out tomorrow morning, JOLTS job openings, that is going to be a big one that you guys need to be watching. Expecting 8.8 million. Last month's rating was 8.82 million. Anything lower is going to be great. Anything higher, maybe not going to be as great. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. You guys have a fantastic rest of your day, and I will see you in the next one.